All right, people, welcome on. Welcome, everybody. Welcome. Get yourselves in. We have an important one on our hands here. Get yourselves in. Get yourselves in, people. All right. Get yourselves in. All right. So let's see what the market is doing. Let's see. Get yourselves in. All right. We're going to crack on. Let's have a look at what the market is doing. So first of all, let's do a recap over the whole week. So first things first, guys, I haven't got much to say today. All right, this will be a short one. Welcome to everyone listening. Money Mike's here back with another video. Now, Solana, we have a major opportunity in here, but before we get to that, I just want to quickly get here with Bitcoin. So you guys remember this pattern right here, or this area here? So this is our H1 supply zone at the moment. So this H1 supply zone that we've seen come up here, the market has used this very beautifully. We've had an accumulation at the edge of the price action zone that we're looking at of supply. We had a drop into demand, and we've had a break above here. Now, on the break above here, guys, we've had a reversal signature from here. All right, so now the price has pulled back. Now, what did I say to you yesterday, guys? If you were listening to me carefully, I said that most likely the re-entry, because the price was kind of hanging around. You see this lower low formation here. So we had the first low, second low, but I wasn't satisfied because we need the price to get back into this very specific, small but very specific area right here in the white. This is the area of entry we're looking for. And you can see at 10 o'clock GMT, or the new day, as I was saying, we can see the market is opened into this area and then its first launch long. Now, there's a second opportunity right now. If you want to get in, the price has just returned here for a second time. Now, the return is not exactly this as low as the first, because the market is changing from a bearish to a bullish structure and price. So we have the first low here, which is the return. And then we have a second low, but you can see that we're having higher lows. And here we had lower lows. So these higher lows here is denoting to a bullish market structure. Okay, now what do you do if you've missed this trade and you want to get in now? Of course, trading Bitcoin is quite expensive. And if you took an entry now, all right, on your account, unless you have the account size, stop loss is roughly around about beneath the gray area or just beneath this zone. Looking about £47 or $47. Now, if you want another entry that you can use, very simple and effective, which will be similar to taking it on from this area right here, I'm going to give it to you. So what you're going to do, you're going to look for the supply zone here, which is responsible for the last piece of shorting that we saw from the previous day. And all you're going to do is wait for the break above there, and that would be your entry. So you want to break and return to the other side. Your stop loss is going to go beneath here. I would suggest, if you're going to take this, all right, get your stop loss somewhere beneath this area here. All right. So if you've been watching me for long enough, you know why I would say something around that area. So looking for a stop loss. All right, stop loss region. So stop loss region, we're looking at around about 47,700 approximately. So, and again, the targets, guys, this is a very short-term trade, well, at least until the first target. So on the H1 here, what we're looking for is a recovery. Now, I'll put the markings here. So on the left here, we have a huge liquidity void that the market is created from the massive short from Bitcoin Day, which is cool right here. So what we want as a first target really is for the price to come back up to here. So what we want is this return right here. And we can take advantage of this for a really good bullish movement. All right. So keep your eyes peeled for this. I'm watching very carefully to see what happens. And from there, we can make our decision. Now, on my demo account for this as well, I did take some trades and did some stuff. Now, another trade that has taken place is Ethereum. So remember, guys, when we discussed Ethereum, all right, there was a very important aspect of, or a very important point to make which was the fact that we had this area right here. All right. We've had the price return back to this area. We had a break of the demand zone that was capping the price, the supply zone. We've had a return here, and this should have been your entry. Now, I didn't post this one, but this is still a fantastic entry for a continuation long. And again, from the looks of the price, we have the opportunity for it to make quite good headway all the way back up to 83,882, or even higher, just 3,900, just over that, 3,904. So in essence, we have another trade here that you could take as an alternative to Bitcoin, which again, trading Ethereum on Hugo's way anyway is quite a lot cheaper than trading Bitcoin. And I'll just show you that with the risk management tool, custom risk management tool from the Wolf Group Academy. So you can see that the margin here is actually less. It's 25 pounds or $25, 25.25. I think that'll be easy for you to remember. 25.25 to have this trade was 0.01. Now the stop loss is beneath this area, which is what we're looking for. So about 30 pounds as a stop loss, and the target is 350. So in essence, 350 for 30 pounds, we're looking at about 1 to 13, well, 1 to 12 and a half risk to reward, approximately, something along those lines. Okay, so still a really pretty good trade. Now, what's the price done so far? Now, the price has taken off, it's spiked to the algorithmic points that we want. Now, there's an opportunity right now for you to buy on the 15-minute. We have a 15-minute supply zone, which was the last leg of this bearish movement. We've just had in the last hour a break above return, and the price is holding here right now. So if you wanted to buy right now, and possibly even a cheekier entry, you should be looking to go long right now. So, okay, on my other accounts, I'm already in this. What I'll do, I'll use a demo demonstration for you guys to see this. So I am going to do this live for you guys to see. So let's pull up this one here. Let's have a look. Now I have a couple of trades on here. All right, I have a buy entry already. So I'm just going to do this here. So on this account size, I'm going to put one lot. All right, I'm going to put quite a tight stop loss 34, 34.20. All right. And I'm going to go for the buy right now because the price has just returned here. So well, I'll keep you up to date. I'm going to hold this over the weekend. Let's see what happens with it. All right. I do expect the price to push long. And yeah, the price is pushing in deeper here. I'll keep my stop loss quite tight, just beneath the low here. Okay. And let's see what happens with that. So moving back to the other account, let's go back. So log into trade account, quickly go back to my live one. Bam. Okay. So again, let's see what Ethereum does. I just gave you the live entry right now. So you should thank me if you make some money, just send me a Rolex. And that's what I wanted for Christmas. I'm playing. All right, let's talk about Solana now. So Solana, SOL, has just done something that we've been waiting for a while now. If you're a technical trader like I am, okay, and not to be boastful, but I'm very confident in my abilities as a technical trader, as otherwise I wouldn't be here. I haven't bought any Solana, no Cardano. I haven't actually invested in any crypto yet. And the reason is not only because of the fundamental sentiment at the moment, but rather because of the technicals. Now, I told you technicals is always a step ahead of fundamentals. A lot of the time in the markets, no matter, even if you don't want to hear this, a lot of times fundamentals, okay, apart from fundamental developments on a project, that's completely different. But just news in general, most of the time on a project is designed to align technicals with fundamentals. So especially if you're well in the market and let's say there's a market inefficiency on a certain price point or order block, then it will be in your best interest for some reason or whatever reason to find a way to allow for news to correct that. Okay, so I'm sure typically you hear from many YouTubers, and you hear it from me too, of market corrections. Now I'll take it a step deeper to talk about what really the correction means. Is not a correction just because the price has to come back down again or go back up or whatever it is. But corrections are order book corrections. The market order book has to balance out. Supply and demand has to be equal. Or not equal necessarily, of course, otherwise the price wouldn't move. But supply and demand order blocks, the orders that have been placed within the market order book's responsibility is to make sure that orders balance. And so if there's inefficiency in the price, which there very often is and will be very often for the next couple of years until things simmer down with crypto and it becomes well established and less volatile, you are going to find that there is quite a few pieces of what's the word I'm looking for? Pieces of inefficiencies across different price points. Secondly, one of the other reasons why I'm not buying anything is because there's a lot of retail trader patterns on the market that institutions can take advantage of. Now, I want you to understand that institutions in getting involved in the crypto is both good and bad. Okay. So before I give you guys the breakdown here, it's not bad, it's mainly good, but I'm just going to I'm going to use this seesaw looking thing. So get a triangle. Now I could have just used the triangle thing here. I don't know why I drew it, but I guess that's just me. But let's just talk about the two sides of the story for a moment. Okay. So if I go right here, let's talk about the good and the bad. So if I talk about the bad on the left, all right, and then we talk about the good on the other side, let's just have a look at the different aspects. Now, I hope this helps you to understand in better detail why crypto does need to know this, and I believe many people need to. So please, at this moment, make sure you put a thumbs up and a like, share this video with your friends and let them know exactly what I'm talking about here. All right, because this is going to be one of the most important things I would say that you need, moving forward. All right, so let's have a look here and see what's going on. Now, let's talk about the bad side first. So on the bad side, why is it bad to have institutions in the market, or why can it potentially be bad? Okay. Number one reason is price manipulation. Okay. Price manipulation, the ability to be able to have such enough liquidity to be able to manipulate the price in the party's favor. Okay. Another term for it could be market cornering also. Now, there are certain projects which I told you will never do well unless their economics change. All right. One of them is Dogecoin. Now, the reason why Dogecoin for me will never do well is not even because of the project and it can't do well. Economically speaking, it's not conducive for, it doesn't allow for institutions to have any opportunity to have any major play in the market. Now, institutions are what makes markets move, and governments, okay? Every market, Forex down to stocks, okay, all of those markets, as large as they are, in order for the money that we're seeing in the market to really take place, and I believe that the beginning of this year really showed you guys this when we had what happened with GameStop happen. Essentially, when it comes to the market or how the market behaves, what we're doing in the market, all right, institutions have such favorable laws. Okay, they have number one, deep pockets, and number two, favorable laws that make them almost unstoppable when it comes to financial markets. Now, crypto, of course, is a different ball game because it's a decentralized society, or that's what their aim is supposed to be. The metaverse is supposed to be a decentralized community, but yet we're aligned together. Interesting concept and powerful concept. However, when you get down to it and we look at these projects, the projects that people are investing in to buy, at the end of the day, they need staff, they need lights, they need electricity, they need a whole load of things. They are an actual company. And because they are an actual company, it still has aspects to stock, or, still has aspects in the market where, you can treat it like a stock. Now, I know you don't want to think of, crypto as stocks or stonks or whatever, but at the same time, the truth is that this is how you have to see it. Money goes into a system, and how money goes into the system is by people purchasing the currency of that system, in this case, Solana. So price manipulation or market cornering is something that every crypto is potentially susceptible to. Okay, and this is the bad side of having manipulation. So if you have an institution that doesn't have your best interests at heart, or I mean, of course, they have their own interests at heart, but doesn't have any other interests apart from their own, you may see this market manipulation situation happening. We see in the stock market all the time, and we also see it in, all right, Forex for sure. All right. So when we look at the markets and we're having a look into what the market is doing, this is one of the things you have to keep in mind. Okay. So why institutions are bad for a crypto, this is the reason why. Okay. Another reason why is, again, is price. This is not manipulation of price. This is more natural. But what you say, fast, what is it? Fast price growth. I'll say fast, unexpected price growth. This is the only other problem with it, okay? A lot of it, as you can see, a lot of the bad side is just to do with the price because that's the crux of everything. The institution is not getting involved with crypto just because they may be passionate about crypto. They're getting involved because they want to make a profit. So you always have to keep that at the front, the back, the side of your mind, that when an institution, just like when a retail trader or you and I are getting involved in crypto, it is, of course, to be a part of a community, but ideally, is the profit that you want to make. You want to be able to buy low and sell high. That's the truth. And so do institutions. So it's in their best interest to make sure they do things with, secret word here, stealth. In other words, stealth buying. All right. Stealth. Hope I spelled this right. Stealth buying. Okay. Now, stealth buying means that they do not announce when they purchase the project, but you just wake up one day and the price has done something crazy. Now, it usually happens before a major news event or something of that sort. Now, I know, of course, I've talked about OTC buying. So let me just go back for a moment and explain this to you. So OTC purchasing, all right, is when, okay, an institution purchases a crypto outside of an exchange. That's what it essentially means. Most of the purchasing that we do, okay, is through an exchange. I don't know many people who've actually met up with somebody because of the infrastructure. The infrastructure is really not there to protect you as well. But I don't know anybody really who's actually met someone up in life or something for a coffee, comes with cash and says, send me your crypto, I'll give you this cash. I haven't seen that. Neither, especially or not online either. There are peer-to-peer ways where someone can, for example, I mean, Bitcoin has one where you can do peer-to-peer transactions. So someone sends you Bitcoin and you send them the cash through this website that kind of has a bit of law to protect both parties. But in essence, this is what we have. So OTC purchasing is there outside of an exchange. Now, especially for something like Bitcoin, all right, which many companies want to have, all right, is then if the kind of money that they're putting into the market, especially we're only at $2 trillion, all right? Now, to put that into perspective, there are companies that are worth more than the entire crypto space, all right? A company, just one company. And crypto is a bunch of there are about 10,000 cryptos, so just say there's about 10,000 companies. So one company, like I believe it's Apple, we'll look at in a moment though, to see where we are. One company like Apple is worth more than 10,000 companies that are all trying to change the world. Some anyway, some are just useless, but the few that are, let's say the top 50, top 20 that are trying to change the world, all right? I mean, that's a bit mean. Top 300 that are trying to actually do things to better the world via crypto and decentralization and stuff are worth less than Apple, which is, a great company, but still, it just shows you that we're very far away from where these potentially can go. But why am I saying this anyway? So with OTC purchasing, institutions, when they want to own Bitcoin or something like that, they usually source out people who own Bitcoin or large wallet holders who are looking to sell some Bitcoin, and they will also make a transaction to buy some in cash. And they do it through an OTC person, through a broker, to be the middleman to facilitate the transaction. That's what usually we have. So me saying that, OTC purchasing is one way, but another thing that's important is that not all purchases are done by OTC, all right? Institutions also have to go through exchanges as well, all right? So exchange purchases do happen with institutions. Exchange purposes, for the purposes of purchasing, do happen with institutions. I mean, if you go to Binance, you can actually apply as an institution to have an institutional account. So basically, they increase your daily withdrawal limit, I believe, or 24-hour limit, same thing. But if you apply as an institution on Binance, you can get 100 BTC withdrawn at one time. Okay. If you're not an institution and you're just a regular person in crypto, then you can only withdraw up to 2 BTC every 24 hours. But if you're an institution, you can have a lot more. So sometimes when you hear things, I'm sure you're on Insta where you hear whale alert and things like that. Sometimes, all right, major institutions do transactions in and out of exchanges at certain times. So major movements, which affects the price. Okay. So the two major things that are bad about institutions, but I guess necessary anyway, is price manipulation or market cornering, which is completely bad, which is just monopolizing the price for their benefit. So crashing the price where it needs to be when they want to achieve a price, and spiking the price when they want people to buy it too early, and then they crash it after, etc. and etc. Okay. So this is what happens. So the exchange purchasing is what really affects the price, because it goes onto the market order book and registers as a massive amount of demand, which will push the price up. All right. And this is usually unexpected. Even if the purchase is happening, all right, you only have a few seconds literally to see the purchase coming in. Now, depending on what tools are used by an exchange, they could just do multiple purchases on different price levels, which will cause the price to absolutely rally. For example, with OTC purchasing, with certain cryptos anyway, I mean, with every crypto possibly, OTC purchasing possibly could go out of fashion and out of business, if you want to put it that way, simply because, for example, with Bitcoin, there's only 21 million. Now, ideally, there should be, there are some, of course, crypto Bitcoins that are burnt and will never be able to be recovered. But from the Bitcoin that does exist in the world, and that's the only amount that will ever exist, there is going to come a point, guys, where nobody wants to sell their Bitcoin at all. And so institutions are going to have to be forced to go to an exchange to buy whatever Bitcoin is available. But if not, for now, OTC would work for Bitcoin and Ethereum. And especially Ethereum is probably going to be another one that OTC purchasing will run out on, because due to the London upgrade, I think about so far $1 billion worth of Ethereum has been burnt, which is about 300,000 Ethereum, something like that, or just less, just something around that figure. But when OTC purchasing runs out for these assets, which are also a store of value due to their tokenomics, then exchanges or companies that get into it late, the ones that are skeptical or just for regulation reasons couldn't do anything until that point in time, they're going to have to be forced to go to an exchange to purchase. And if they do so, that would cause the price to spike massively, because the amount of money that they have compared to the amount of money that a retail trader has is completely different, which leads me on to my first point. Okay, the good side of institutions being in a crypto is what I call institutional, or the better way to put it is price cushions. Price cushions. All right. I like to always say things in a way that will help you to understand. What are price cushions? Well, simply a price cushion is just as the picture denotes. Let's say that the prices drop into a certain period. Now we can see this. If you want to see this in more detail, please watch my video on how to, it's called how you will not survive in the crypto market in 2021 without this skill. There's a 2-part series of it so far. I would like you to definitely watch that. But in that video, I talk about the difference between when Ethereum crashed or the price crash we saw in Ethereum back from May into July compared to Dogecoin, okay? Ethereum not only crashed, now when it comes to the crashing here, if I click on Ethereum quickly and I go back to let's just go back to where we are in the weekly time frame here. As you can see with Ethereum, the drop that we saw in price from the all-time high of roughly around about 4,370 down to the lowest point that it got to, which was about 1,700, the market has almost recovered. Now, it has dropped quite a bit, but at the moment, anyway, Ethereum has almost come almost all the way to the all-time high. It got up to 4,000 at one point, even though it has dropped a bit because of what we saw with Bitcoin Day. But in essence, it was only just over $350 away from the all-time high, $370 actually. All right. Whereas if we look at Dogecoin, all right, I pull up Doge right here, take off all of these markings. Now, again, in the video, I put it into more detail, but I just want you guys to see this because it's a very important thing to note. If you look at the all-time high of Doge, which was 74 cents, the price crashed to its lowest period. Even if we talk about the same month itself or just to the lowest period here, Dogecoin got all the way down to 15.8 cents. All right. Now, so far, Doge is only at 24 cents. It at the moment is actually 50 cents off the all-time high, which, to put that into perspective, we're talking about 250% away from its all-time high. So Doge would have to do at least 2x, 2.5x, even 3 to get back to its all-time high. All right. So why am I saying this? Doge's recovery is almost non-existent because there isn't any institutional money. There's no price cushion here. Doge could literally fall back to zero very easily if you're in the right conditions. And the reason is because, as I've told you many times before, the Doge, four people own 80 or 70% of all of the token supply of Doge, which makes it very unfriendly for institutions to want to invest. It's very unfavorable for them to be involved in such a project, okay? Because they will be instantly would have to become a whale, number one. And if they can't get any more, they can't be a whale or they can't have any major influence. And they also will be at risk. Why? Because if one of those four people or two of those four people even or decide to sell, is going to have major effects on the price. And price instability is not what institutions need because they're dealing with millions and even billions of dollars. Okay. So I hope that short, quick demonstration will help you to understand my stance on things. So coming back to where we are here. All right. Let me put this back. So on the good side, we have price cushions, which means two things. All right. I'll put the two things. Number one, it means resistance to price crashes. All right. Resistant to price crashes, it should be ES at the end. The second thing is ability for price recovery. All right. As we've just seen here with what we saw with Ethereum, Ethereum is almost definitely, without a shadow of fact, if it doesn't do anything else, will definitely get back to its all-time high. It's very close to it. We just need the correct market conditions for that situation to happen. All right. Now there is a third thing here: resistant to price crashes, the ability for price recovery. Okay. And one of the most important things which institutional money provides is price stability. Okay. Price stability. Now, a lot of the reasons why many cryptos go from 1000x to 100x, then to 500x, they just keep spiking up and down, is due to the lack of money in the system. When you have institutional money and interest, okay, the institutional interest has a chain effect also, which I'm going to talk about in a minute. All right. But this main thing here is price cushions. But when the price is stable and you can see long moves or good movement of increase in value over time, it's because of this institutional money that's involved. To be really honest with you, until institutional levels and then the governmental levels accept crypto, crypto will never become mainstream. So we do need them. All right. We don't want it to be an us and them thing. I know that they don't have retail traders' best interests at heart, but at the end of the day, I always say, and this is part of the Wealth Group Academy's core philosophy, he who has the most money makes all the rules and the rest must follow. That's just how it goes. I'll say it one more time. He who has the most money makes all the rules and the rest must follow. This is just how it goes and how it will always be. So the next point here, which I really want to dive into, is apart from price cushions, all right, I call this the shepherd effect. Shepherd effect. Have I spelled that right? Oh my God. Yep. Shepherd effect. You know exactly what I'm saying, guys. I don't know what's going on. Shepherd effect. Yep. All right, that's why I had an extra piece of writing here. So the second thing is the shepherd effect. What is that? It's a very powerful effect and it's very simple. If you think about a sheep and a shepherd, wherever the shepherd goes, the sheep will follow. Now, institutions, they're not necessarily sheep, but in essence, what it is when one institution gets into, okay, I'll say one major is important. One major, for example, one major institution gets into a crypto or into crypto, others will follow suit. Okay. So when one major institution gets into crypto, others will follow. All right. Why is this? For one big reason, it is competitive. All right. Let's put this properly. Competitive activity. All right, so competitive activity, why is this important? Now think about this. Every company, especially a tech company, always wants to be at the forefront, wants to have an competitive advantage, all right? So I'm going to put this here. I'm actually going to change this and call it, instead of competitive activity, competitive advantage. So advantage, all right? So when it comes to the competitive advantage, what are we looking at? So when you delve into a company, institutions, all of them are trying to be ahead, okay? Whether it's a hedge fund who wants to have more options to provide to their investors and to grow in demand and appeal to that, or whether it's a company who deals with a certain thing that crypto does that they want to be involved in and incorporate in their business. Once the news comes out of a major partnership, then other companies are going to follow suit because it brings two things, all right? Now, even though each country, I don't even want to call it country, each business, but they seem to be like a country of their own because of their own different beliefs. All right. The reason for these two things, number one, that allows other institutions to get involved is trust. Okay. Because although institutions compete with each other to be the best, all right, they all both each respect it. They wouldn't compete with each other if they didn't respect the ability for them to possibly outdo one another. So there is going to be trust there. So if one company gets in, so let's say, for example, JP Morgan goes fully fledged into crypto, then most likely you'll see Goldman Sachs and Citigroup and others follow suit just after. Okay, this is how it goes. So it brings a competitive edge. And number one, it builds trust. All right. Number two, okay, as we talked about, it breeds when this competitive advantage comes along and companies are seeking to do that, it's trust. All right. And also, I know it sounds strange, but it's going to allow for market research. All right. So sometimes what will happen is that, think about the way that Cardano and Polkadot were made. Originally, Polkadot's founder, Gavin, and the founder or co-founder or founder of Cardano, Mr. Charles Hodgkinson, they were also co-founders of Ethereum. So they had, now this is within the company. Within the company, they're with Vitalik. They're watching how the company is. They've done major things in the company. They've worked with him. Now, if you listen to any of them, one of the major things they've always said is, because if Ethereum is so great, why would you make another crypto level layer one anyway? And the simple answer is because they've seen everything that's wrong with Ethereum and what he's failed to deliver on so far, and they've come to make that happen. So one person has split over to go to the Polkadot side, the other has moved over to Cardano. So this is what basically we are seeing when it comes to companies. So sometimes some companies will also do this thing and allow others to go first, all right, to see what they do and, to be honest, how they mess up so that they can do better. So a lot of companies do want to get into crypto, but I think they're watching to see the ones who have gone headfirst in, see what mistakes they make so that they can come back stronger, because it saves them time learning from the mistakes and also saves them money, which is two big things that they want to save time, save money, save time and save money. So I hope you see the picture here as to why institutional money is good. So why Solana now? So with Solana, all right, one of the things that happens when it comes to unexpected price growth from a technical standpoint, all right, is market inefficiencies, all right? Specifically, order block, the type of market inefficiency or price inefficiency, I should say, all right, would be order block inefficiencies, all right? So imbalance price action. Now, the resulting imbalance price action usually comes from a very strong interest in a crypto for a certain period of time. So retail money comes in and pushes the price up. When institutional money comes in, it doesn't leave inefficiencies because there's a lot of money there. But when retail traders do, because the amount of money is not the same, it can leave inefficiencies and gaps and different things. Now, Solana, why am I so big on Solana right now as a good discount price? Well, on the H4 here, the crux of demand for the previous week was at this point right here. We had a very strong long, followed by a very strong short. A few days ago, the Solana project switched off for a minute, but you see it didn't really affect the price. Okay, we should have seen a massive drop. So there's other factors controlling Solana apart from news. And from a technical standpoint, we've just had a break, and now we're having the return to the other side of this area. Now, if the price closes within here on the H4, then I would expect, even if the price closes back above here, I would still expect Solana to make some descent down. All right. Now, there's a double bottom here, which the reason why I'm talking about this is because many retail traders probably saw this on their technical analysis for a buy. Now, as an institution, why am I talking about institutions? Well, institutionals have to play the game. Somebody has to buy high for else, or somebody has to sell low or buy low, excuse me, I should say, for somebody else to sell high. Or in other words, when you're trying to sell high, somebody needs to buy your crypto from you. So to make it less confusing, if I bought Solana for $1.50 and then I sold it for $50, when I'm selling for $50, somebody's purchasing it at $50. So institutions who want to get into this, who are not doing OTC, just exchange or whatever, or other people who want to get a cheaper price in there, what could they do? Well, they have different measures of tools that they can use to cause the price to move short. And one of them would be to allow for technical entries to happen. So we had a double bottom here, which means that a lot of people bought at this point. And one of the best things that the market could do is to reverse back to this point and stop out. If you're thinking of this as stop losses, stop out the buy traders or get them back to break even, which for an institution can do. If you're an institution and you're already in this market, all right, you could use your tools, which is not unfair, really. It's part of the game to push the market a bit further short and come back to cheaper areas to rebuy again. There's certain ways to do so, but this is just my mind on the market now. Since we've had this here, if I were you, this is not financial advice. At the end of the day, seek a financial advisor before you make any financial decision. The final decision belongs to you. But if it were me, I would say personally, the reason why I'm not purchasing any crypto right now, even though Bitcoin is going long, is because I can see the technical advantage for another short, all the way back down to even 66. All right. Now, the more near-term targets, the next crux of demand area is around about 120, as I've been talking about, or just beneath that. And then after that, we have some lower down areas of demand at 108. But then my major area I'm looking for is this 66 mark, which could happen very easily or may not happen. But all I wanted to give you is this is the major price point advantage right here. So if you do want to get in, you can. Now, someone asked me, should I sell my Solana? No, I wouldn't touch Solana. I would say think about the dollar cost averaging rather than trying to sell. It's better that way you do so, because at least from there, you'll be able to grab the best opportunity for, when you're looking at the market. So take it that way, keep your mind open, because at the end of the day, I always think about Bitcoin. When Bitcoin just spiked from, I believe it was like $1 or something, or $10 up to 200, in your mind, you would think, oh my God, $200 is so expensive, and then you wait for the price to drop back, and keep on dropping, and then it never drops. So it's better for you to dollar cost average, because it was a lot easier to own one Bitcoin in 2013 or 2011 than it is now, So this is my view. I'll say keep your eyes on Solana, watch this opportunity here, and let's see some price dips happening. So I hope you guys enjoyed that, and I'll catch you guys on the next one. Everybody take care.